All right, trade pros, good morning. Welcome to our morning market update for June the 8th of 2020. Hope you guys have had a great weekend. Hope you've had a great day as well. I missed you guys. And let's talk about a few things here in our morning market update. It's time to get back to work and rock it. All right, here's your Power 60. Airbnb is surprisingly seeing a huge surge in summer demand. All right, more nights were booked for U.S. listings between May 17th and June 3rd than the same period last year. Now, that might sound a little shocking considering this coronavirus situation. All right, but it is not when you think about international vacations being canceled and people opting for more impulsive road trips. So Airbnb demand is up for out-of-city getaway stays from May 17th to June 3rd. That's interesting. All right, in other news, New Zealand's removing their social distancing rules after reporting 0 active cases. All right, Jacinda Ardern's government has enforced one of the strictest lockdowns. Now they have 0 cases. They're lifting all social distancing measures. That's going to be interesting to follow to see what happens afterward. And then on the morning news as well, AstraZeneca rumored to want to acquire Gilead Sciences. AZ is a bigger company, and they want to collaborate on a virus vaccine together to put their efforts into one joint venture. That's kind of on the news front this morning. They'd form a huge corporation if they do combine or there is a merger. All right, in today's markets in Asia, Japan's up 1.4%, Hong Kong's flat, China's up 0.2%, India's up 0.4%. In Europe at midday, London's up 0.2%, Paris is down 0.4%, Frankfurt's down 0.5%, and in the U.S., Dow up 0.6%, S&P up 0.4%, Nasdaq up 0.2%. Modest gains in Asia and U.S., and some sideways to downward price action out of Europe. All right, crude oil this morning is up 1.6%. All right, it is currently trading on the June contract, which we'll be switching soon. It's trading at 38.71 was the open. So we have seen a give back this morning on some commentary from OPEC that wasn't as bullish as the actual OPEC deal over the weekend. But we did get a deal on the weekend. OPEC Plus finalized a 9.6 million barrel collective cuts of 9.6 million barrels on a daily basis. They agreed on that until the end of next month. So it's a short-term extension. The market had sort of already priced that in. It was, in these markets, you buy the rumor, sell the news. I think this morning oil finds itself in a situation where, hey, we already factored that in. Let's sell and take some profit. And that's where we're at the moment. Nigeria and Iraq are going to be making up for their backlog of reductions with deeper cuts over the next 3 months as they cheated and got caught. Mexico is no longer part of this pact. They do not want to curb their output beyond June. All right, and with the existing members who do want to continue with these extensions of cuts, they're going to be meeting. Next meeting is June 18th. Put that on your calendar. There's going to be a lot other OPEC-related news and job owning by then, but that's the next big date. And that's it. That's what you need to know. OPEC made a deal. It was widely expected. It wasn't a long-term deal, and it wasn't an exuberant deal that no one had already sort of priced in. The price is already in oil, this deal. All right, gold's up 1%, 1607.90. Bitcoin's up 1.2. Not much news for today's calendar. We have the results of a 44 billion 3-year note auction at 1 p.m. Nothing really dramatic for equities this morning. Watch for just news and one-off items. Other than that, no scheduled economic events that could cause a ton of volatility. Tomorrow is the same. So if we review the weekly calendar, Tuesday there's no volatile events, no economic events, but Wednesday we pick up with inflation at 8:30 in the morning. That's going to be an important one for gold, for the US dollar, and for equities as well. So watch at 8:30 inflation. That's a huge number this week. And then Wednesday, same day in the afternoon at 2 p.m., the Fed is meeting to talk about their latest federal funds rate, which everyone's expecting for it to be on hold. They're not going to cut or raise. The bigger questions are going to be continue with their monetary or their quantitative easing and their monetary policy program. Will they continue to accommodate? For how long? All right, will they control the yield curve, or are they looking for yield curve control? There's a lot of questions that are unanswered, and I think the Fed this Wednesday will probably do a great job of not answering them and raising even more questions. All right, the Fed is driving the market. What more do we need to know? So that's a big one though at 2 p.m. and 2:30 on Wednesday. Thursday we have some PPI data, medium impact events, and then Friday we ended out with preliminary University of Michigan consumer sentiment studies at 10 a.m. at top of the hour. Okay, that's the calendar. Lighter one than usual. The big day of the week is Wednesday. Just like last week, big day of the week was Friday. We saw huge gains on that day. All right, midweek is going to be the kicker. That's what we got. Equities are off to a bit of a bullish overnight flow. I do think this morning we look for some downside early on. There's going to be some profit taking and see where we go from there. You guys have a great rest of your session on YouTube. Yeah, it was. Lee, my birthday was this Saturday, and I thank you so much, sir. So 2 days ago. Not yesterday, but the day before. I appreciate it. Morning, play. Hope you're doing well, brother. Craig, good morning. Okay, you guys take care on YouTube. Love you guys. And be safe out there. Manage your risk. Trade like a trade pro. Let's get started in our trading room today. We got an exciting day ahead of us. And join us. Check out what we're all about. Take care. Goodbye. Ciao. All right, let's get going with oil and then go back to equities for some levels and trade setups. And let's take them. Let's make some money today. Excited for a strong start.